Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go over to those Bitcoin 4-hour charts. Yeah, so Bitcoin is still drifting down here. You can see at this exact moment in time, we're having a bit of a foray price action below these wicks that we were looking at yesterday. In the potential bull flag we've got. So yeah, that is looks like it's breaking to the downside. So yeah, how low could we go? I think we said yesterday we could come all the way back down and test this support area, or if we are lucky, we could potentially get supported around this horizontal here, where we're not too far from at the moment. That would obviously be the more bullish scenario. Get supported there, and then we can then make a nice higher low around here and then move back up. But yeah, that is what we've got going on now. If we want to go and have a look at stock market, see how they are doing, you can see they are having a bit of trouble negotiating this upper level of resistance here, which is fine. That is not the worst thing for us to be doing. We don't necessarily have to break right straight above it. We can maybe move this, have another horizontal support level down here. So we're at this potential horizontal level, and then we've got one below here. We hold those and don't come down and test this one. That is obviously ideal, and then bounce off those, ultimately turn back up, and then we can take this out. We don't necessarily need to move up in a straight line, but that would be the bullish path. Clearly the bearish path would be we do come down and test the support, at which point we would have a reasonable chance of breaking through it. The problem we are having at the moment, is that we're getting a lot of inflation numbers coming in pretty strong. Prices paid, producer price index, things like that, export prices, lots of indications that inflation is still a problem, and an increasing problem. These numbers, a lot of these numbers are basically above basically the economist expectations, which it's just funny, those expectations, because they do tend to be wrong quite a lot recently, and it's just like, how do these guys have a job making wrong predictions week in, week out? But yeah, a lot of these numbers coming in a lot hotter. So we could have another inflation problem. I say another inflation problem. We could have more problems with the Fed having to then come out and be more aggressive. But I feel like they kind of know that they can't now. So what is happening, and what is the biggest tell in my opinion, is this over here, which is gold, which is our actual historic inflation play. It looks like it is actually starting to make some moves off the back of obviously initially this gold market was moving on the back of increased inflation prints. It was getting hit because people then thought, okay, the Fed was going to aggressively fight this, and as the inflation persists and actually gets worse in some of the stats, it's becoming probably more apparent that the Fed is not going to be able to fight it, at least to the extent that it needs to. Even if it tries to fight it, it's not going to be able to actually win that fight. And in the words of good old Peter Schiff, that is clearly good for gold, and it looks like finally gold is starting to price that in, which for me is the biggest tell that the market is now basically, number one, realizing that the inflation is potentially going to be a bit worse than what they were expecting, because even I've been saying I expect it to kind of ease off with supply chains, but well, basically what I hadn't really accounted for was just how strong energy prices and how persistently strong they can be, because they've obviously gone on an absolute mad one. That was what was missing from my analysis, yeah, so I mean that is obviously one of the big drivers here. And yeah, what I was gonna say was So yeah, inflation persisting more than expected, and then that was it. And then so what we did have previously, this is the point I was trying to make. What we did have previously was when the hot inflation numbers came through, gold was getting whacked because then people assumed, okay, so the Fed is going to raise rates and fight this and tighten, and gold is then going to suffer. Now we're getting the inflation prints, and gold is doing the opposite, and it's now thinking, okay, the Fed ain't going to be able to do much about this. It can try, but it isn't going to be able to do enough. It hasn't got the stomach to do what is needed. Therefore, gold prices go up. That is a definite shift in the sentiment of how this market is trading based on the information. A complete 180. High inflation numbers, gold whacked. Higher inflation numbers, gold up. Which is, I mean, if you want to look at it from a perspective of people involved in risk assets, I mean, it is clearly bullish. It shows that you have to get out of cash. As soon as you get your cash, spend it, as they say in Venezuela and Argentina. As soon as you get your cash, spend it. Buy things with it. Buy gold. Buy even stocks. Buy whatever. Maybe even buy some crypto. Who knows? But yeah, it's we are fully entering what is looking like a cash is trash scenario. And the Fed ain't going to do what is required. I'm not going to say the Fed isn't going to do anything, because the Fed's going to do something, but the Fed isn't going to do what is required because, well, there's so many reasons why. It's not politically palatable. It's not feasible based on the debt that's going on. Then also the crash in asset markets and the collapse of probably certain financial systems that would have to happen. Just ain't gonna happen, basically. So so whilst I say not looking ideal, it is now looking better for risk assets, which is probably why off the back of these massive higher inflation numbers, we're not getting or just worse inflation numbers, we're not getting a move down in stocks that is considerably worse. I know we're getting some weakness off the Ukraine stuff, but we were getting weakness long before that, and it was a lot deeper than that as well. We could be entering that risk asset bounce sweet spot for the next couple of quarters before liquidity really starts to get withdrawn. Because, like I said, a lot of it is liquidity, and yeah, I mean, there is still obviously liquidity being added to the markets as inflation runs rampant, and the Fed basically tries to slow walk that liquidity out. What will happen is at some point something will break, and then we can get like a potential move down. But in the interim, we could get a nice move back on that inflation. I don't know why I can't talk properly today. It's very strange. I had a lot of sleep the past 2 nights, so I am fine. But anyway, what else do you want to look at? DXY also not going on a mad one to the upside. Still kind of flirting with this support now. Potentially it can break through again. Obviously, the dollar will suffer in a steady environment that I'm talking about. The dollar will suffer as in go down when obviously people want to get out the dollar, want to buy real assets and real things. Inflation is running hot, and the Fed ain't doing anything. That's clearly weak for these dollars. And the 10-year, whilst it is still clearly elevated, it hasn't made another substantial leg to the upside because like I said, the Fed is potentially impotent in the face of what is going on in the market, is potentially realizing. So they are going to either try and pin this in some other ways, or basically it's just not going to be able to. It's just not going to run up in the face of the problems that are gonna ensue. Oil as well hovering around these highs, which is clearly with the de-escalation in the Ukraine. Clearly is a bullish sign, and like I've said, this was the missing piece for my analysis as we'd been watching the oil price kind of do its thing, expecting supply chains basically to thaw out. Basically the inflation, the baton of the inflation was clearly picked up by the energy market, and it has obviously now gone on its leg and taken over from supply chain problems. So yeah, we are getting we had like a relay of inflation problems, of inflation drivers. That was it, of basically carrying the inflation torch, and it is currently commodities it is currently energy prices, commodities as a whole are going a bit crazy. I mean, obviously some things like iron ore getting a little bit of a pullback based on some shenanigans in China, when China doesn't want free markets. But yeah, we are. But obviously energy is most notably the one that is running rampant at the moment. So to summarize, we have an inflation problem, but it is becoming increasing. Well, obviously we know we had an inflation problem. The inflation problem that many spectators were maybe expecting to wane has now actually started to basically look bad again. And at this point, there isn't really the confidence in the Fed to fight it, as is reflected through through gold, through PMs, precious metals, and yeah, that's what we're in at the moment. So we keep going to the Fed maybe does something crazy, which I doubt it will, and if it does, then we get a crash. Then that won't probably be anytime soon. Probably a good few months away. And yeah, they will try other things. They'll try their price controls, yield curve controls, just giving people money, UBI, all that fun stuff. All that fun stuff is to come. All those what will be called, in inverted commas, extraordinary measures will start to come. I mean, we should probably just call them ordinary measures, because they will become ordinary. They're only extraordinary because they're new, and then they'll become basically just like QE, just never ending. Just part of the framework. So yeah, stochastics, let's have a quick look at those stochastics as we do. 4 hour, yeah, downward pressure on 4 hour, which we kind of saw yesterday as well. 10 hour probably turning back from its high level still. Yeah, turning back, not necessarily as high as it could be, but yeah, turning down from here. But 12 hour looking good. And is the daily still pointing up? Yeah, daily looking all right here as well. Bi-daily looking okay, and then 3 and 5 day weekly all looking like the ones that could potentially give us that nice leg up, and then this little kink in the bi-weekly as well. So yeah, we could be looking at potentially a nice leg up, like I said. If PMs start to get going, if inflation starts to get going, and we don't, and the market starts to price out confidence in the Fed, then yeah, I mean, we could go on a run. We've obviously got these shenanigans going on in Canada, which is sort of like a prelude to what the central banking system, or the banking system, these state actors, the governments have got. I've just basically their modus operandi, their MO will be to basically try and use the financial system against you. So that is going to drive more people into this asset, whilst this asset should be getting driven up as an inflation hedge anyway, let alone a risk against the financial system hedge. So yeah, there we go, guys. All fun and games in the financial system, just as we like it. So yeah, thanks for listening. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.